Today's number is 18, and there are two reasons why. One of them has to do with semiconductors and what's happened in the past, and the other one has to do with the last 19 sessions. Did you know that 18 of them have actually been gap ups on the S&P 500? What happens next after stats like this? Well, in today's video, we'll break it all down together as we deep dive into semiconductors, what's going on in markets and where the breakouts are happening, and of course, the weird stats that you need to know that are happening on Wall Street right now. To make matters even weirder, we've got some big breakouts, and one of them comes from crypto. Ethereum going absolutely wild at the time of this recording. Guys, don't go anywhere. We'll see you in just a moment. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we need to break down exactly what's going on in the markets this week together. The macro, the inflation figures, and of course, the key levels that you need to be watching. What are they, and why should we be paying attention? Well, let's kick things off with the headlines that are actually breaking down the markets right now, and I'm noticing this weekend quite a few of them. Number one, Tom Lee just came out on CNBC, and he's saying that the rally is going to start next week, as in he's being even more bullish than usual on what's just happened, probably off the back of semiconductors. On top of this, JP Morgan is predicting that the Fed will rate cut 4 times this year, which is pretty epic. And of course, traders are now the shortest they've been on small caps since 2022, which begs the question, will we see a squeeze finally in the index that no one's loved for quite some time? Well, let's kick things off here with the big one, which is, of course, 18 of the last 19 sessions. Now, we've often featured Jason Gottfried's nice charts on this channel, and of course, it's a good one here again. Only 2 data points, but there is something to read into this, and that is particularly the times, which, of course, one of them was to do with tariffs, and the other one, of course, was the 97, 98 kind of run, which is, of course, the dot-com boom. And the second thing is what happened afterwards. Now, you may be saying to yourself, well, wait a second, Tom, the markets continued to go up, and you would be correct. Actually, one of the members on X did this little scribble here, which I quite like, oversold stock hunter, and we saw the markets actually go up 2% on one case, then drop 10, which is interesting. Then the other one actually went up 5 and then dropped 10. And what you'll notice is they were in very short time frames. And I think this is the key here, because of course you guys know that I'm not a fan of August, September, and October generally from a market point of view when it comes to seeing extreme bullishness. We've over the years observed many of these times and usually seen some type of volatility. And do remember, volatility likely kicked off last week with that engulf candle that didn't confirm, which is that we didn't see a new low being formed after the weekly closed. Now, why is this important? Well, we're seeing dark pool activity, which basically is, of course, secret activity or activity that doesn't go through the general market and gets reported at the end of the day between different large traders. And that's happening on quite a lot of VIX pairs. So we'll have a report on that a little bit later in today's show. Let's talk about semiconductors and a 4-month streak. Nautilus bringing out some good data recently, and giving them a shout out here. And obviously, one of the things I'm liking to see is the 6-month data. Now, this is actually 100% read. We mentioned at the start of the show, if you've seen strength like this from semiconductors, it generally means more strength is actually going to happen. And in fact, 6 months later, we were seeing on average after the signals, and there are a lot of reads here, so you've got to pay attention to it, 13.55%. So that suggests that, again, if we do get dips, at the moment, the market is in its own la-la land, and it is just absolutely ripping on this idea that AI is going to revolutionize everything. And of course, it is going to revolutionize everything, but as we know, like any normal market, the way that it works is that you get your hardware phase, then of course you start getting your product phase. And usually somewhere in between that, there's a blip. And I've actually written a little bit more about this on LinkedIn if you're interested. Follow me in the links in the description down below, because I'm posting there some of my general macro thoughts and psychology thoughts on markets, which I think a lot of you guys will find interesting. So follow Thomas Atkinson over there if you're interested. Now let's move over to why this is important. Well, really, semiconductors is probably one of the only sectors of the market that matters. Of course, we've got the Mag 7, and then we have just the semiconductors market. Now, why does it matter? Well, actually, we are now the most concentrated, and technically we're way more concentrated than this, but we haven't actually seen the tech sector be this big a pie of the overall market since, of course, the 2000s. And that was just before the dot-com bubble. Now, it actually is even bigger than this because, of course, the technology sector got split over the years and we ended up getting this communication services area. So if you add them together, you end up getting 44 plus kind of percent, and you end up getting a massive amount. Almost half of the S&P 500 is currently tech. So that means whatever tech does, the market will do next. And of course, when we have this type of strength, and you can see here by this chart, 35% of stocks are outperforming the market, and we've got 84% gain. It generally means it's a concentrated market. And these never tend to end well. And you may say this time is different. I doubt it's going to be any different, but you've got to remember it can go for a long time. Look how long you got concentration for in the 2000s, in the 90s. Look at the concentration in the Nifty back in the 70s. So it can happen for a long time. And you've got to remember innovation does tend to lead into massive bubbles, massive busts, and that's always the way it is. So is it working? Well, AI adoption is not currently lifting US labor productivity yet, at least according to the latest data stats. It's obviously allowing quite a few companies, though, to, let's just say, fire staff, it looks like. And of course, concentration is continuing to be very strong. And this is actually one of the biggest reads, I think, of the rest of 2025 into 26, which is to make sure that that concentration almost continues. Because now we are where we are. We want these stocks just to continue basically becoming strong because they're such a huge part of the S&P. If they start to fall, the whole market index will fall anyway. Now, why is this important to pay attention to? Well, credit default swaps, which is basically what you want to be looking at, and credit spreads in general, they're all very, very tight. And this suggests that the bonds market doesn't seem to see any problems. Now, will it see problems? Yeah, at some point it may, but it doesn't at the moment. So that means it's all green, all good. And that's leading into earnings. Anything that is AI exposed right now is up big time this year. Not only is that really the only sector other than utilities doing very, very well, but it's also what's been doing well in earnings. We're seeing, of course, AI companies smash it out of the ballpark. And we're also seeing another kind of thing going on, which is people betting against fiat. That is people betting against the dollar, people saying, oh, I'm sick of, all these normal currencies that we use in these countries that we get paid in, and I'm going to put my money in gold and Bitcoin. And if you haven't already guessed it, this is the type of thing that happens nearer to the end of a larger bull cycle. And why does it happen? Well, of course, it all breaks down to the idea that effectively there is something going on in the debt markets, and that is usually not very good. And smart money and bigger money tends to flow into these assets. Now, you guys know if you've been watching this channel for a long time, by the way, if you're new, make sure to subscribe, and links in the comments down below, and hit that bell because we do this daily. And now that I'm back from vacation, I'm looking forward to getting back into it daily, guys. So thank you for bearing with us this week. So one of the things about this is, of course, that when we're seeing this type of thing happening, it means that somebody is concerned about debt. And gold, and now, of course, the new pseudo gold, which is Bitcoin, are going absolutely ballistic. But we're also seeing a pretty good earnings season. Now, 89% of the S&P has reported its earnings. It's been strong. And of course, we're basically seeing an absolute beat. And this is very strong earnings. So, of course, the street was right in terms of its V-shaped recovery so far, and it has been technology-led. Look at this, 94% beating. That's huge. That's a big number. And of course, that looks very, very good on the paper. The other thing that's happened is we've also had a pretty good 3-month performance. Now, if you take all of the bad kind of markets, that is, all of the markets that have led into recessions or big sell-offs, this is not the market structure that tends to lead into that big one. Now, it doesn't mean that it won't come. So anyone that's out there that's feeling bearish, it'll probably eventually come because, it is the way it is. And we're starting to get due for it over the next, 6, 12, and even 24 months. But why is it important to pay attention to this? Well, because, of course, as the structure goes up, we've never seen a market do this and then be at the end. Now, that doesn't mean it can't dip, but ultimately it pulls back and moves up. So it's a very interesting study. And of course, you guys know I'm a big fan of looking at market structure. Now, one of the reasons we look at market structure like this is because once you look at the trend and you superimpose it with all of the other previous known ones, it tends to be a pretty good read. And of course, that helps you when you're wanting to dip buy, and it also helps you when you're wanting to understand whether you actually are in a market that's going to continue to be strong. And even in the face of inflation, and even in the face of course, everything that's going on right now with the tariffs, and I was researching the tariffs, but the problem is some of these tariffs have been coming on, some are going off. So we're just going to have to assume for now that the market is ignoring them, which it has been, of course, for the last couple of months. And everything will just be kind of like postponed and sent forward. And that's what the market's doing. But this week we will find out a little bit more in the inflation numbers. Now let's take a look at liquidity. Liquidity is on the improve. We've known this is going to happen for a while. We expect liquidity most likely to top off sometime end of this year, early 2026, and that to then be a big problem for, of course, markets. Now, when will it happen? We'll find out when it does happen. And a lot of you guys might say, well, wait a second, the Fed and central banks aren't pumping liquidity in. They are, they're just doing it in different ways. So that's always important to note. Now, let's take a look at the CPI. This is an interesting one because core goods less transportation commodities has actually just skyrocketed up. Now, this is the fastest and highest rate that it's gone since actually COVID. So this is a big number here, and it could suggest that CPI might be a bit of a shocker this week. Now, I don't know it's going to happen like that. And you know, guys, I do not like to predict those types of things, but we are going to face off at a very important level. And that's, of course, going to be 6,400. As the market has rallied back up, we're getting closer again to that massive core wall. And you guys know what happens. We get through that, we go into what we call positive gamma, and we stay underneath it. And then, of course, the market will find that as what you would call resistance on the charts. More on that later as we go through the dark pools. There's a lot to cover. Fannie Mae, Freddie Mac climbing. Supposedly, we're going to see this actually turn into public. So basically, Freddie Mac and Fannie Mae will become public companies. This is going to kind of nationalize some of the debt, which is going to be interesting. So that's something that's in the back stories. We'll have to talk about that more soon. Silver CTAs, they're purchasing. That's a good sign for us because, of course, we like silver here on the channel. We've seen some good technicals on it, and I am still overall bullish on it to 42.43 in terms of the macro side. Hopefully, it's my own potential opinion. Don't go and do anything on it, guys, of course. And we've also seen gold pick up as well, although gold did get tariffed and then tariff came off it, I believe, or at least it got clarified. What about crypto? Bitcoin shrimps. That's us, by the way. So we are shrimps and fish. So basically, we're the small guys. And it looks like we're buying in big time. Now, not only have you got MSTR and MSTR clones, which are up there at 140 or 150 companies, but we've also seen some other big news, which is that Harvard and Brown University have actually purchased in with their endowments funds. So they're not purchasing a little bit. They're finally getting into the crypto kind of craze, and this is an interesting thing. So whether that means it's the top of the market or it's just going to keep going up, still really solidifying that this is now a legitimate asset from so many different businesses, companies, and of course, when you get those education in it, that usually are the colleges, that usually means that it's here to stay and it ain't going anywhere. Let's talk about VIX volatility. A couple of dark pools, most likely close-offs. I think the exciting thing about the VIX here is, of course, we expected the VIX to start to get more volatile. Why? Well, as of August into October, yeah, you guessed it, that is the most volatile period. So we tend to see volatility spikes. I don't think that's going to stop. We had some large movements. We're starting to get a bit more dark pool activity coming through, and that's a good sign for us as traders. And it's also a good sign for us as probably guessing correctly that the markets will be very kangaroo-y over the next coming weeks. And you might say, oh, but Tom, look, it's only just goes up by the dip. Yeah, I mean, historically that's been the way, but at the same time, there's probably still going to be a lot of kangaroo-style marketing. Here's another big one. We've got an S&P 500 quality ETF. Big number 4 transaction came in, so that's fairly large near the end of the day. Now, why is that worthwhile paying attention to? Well, of course, they don't exactly get price necessarily correct, as in it's not the perfect price. They go for where the liquidity actually is, and this market could still push up higher. So we could go to something like 6,400, get the inflation number, possibly drop. That's possible. But for now, of course, what is the trend? As long as it holds above 62, it's technically intact, and we'll look at that soon. Another one was Tesla. All those big trades that we saw come through, especially on this 2 times levered fund, Well, it looks like they were buys because Tesla has since moved up rather considerably. So well done if you got that correct. Now, has August usually been bad? We're basically, a third of the way through August now at the time of this recording. The answer is yes. It's usually volatile during these types of years, and it's usually negative. Now, it's not running bad at the moment, but just keep that in the back of your mind. It is there. If you see a price-based actual move that confirms, then that's probably going to lead it down. And of course, the level that we're looking for in particular is 6,000. So you can see why August, September, especially in post-election years, they tend to be a bit more brutal. And these are the 2 months that we expect volatility to be in the markets. You can also see that we get weird things going on in August that we've already discussed. Now, earnings season might have seen the most amount of companies in terms of market cap come through, but there are still some more. Here are the big ones this week, if you do follow any of those. And here are some of the volatile moves that are kind of going to potentially come through. JD, particularly in China, that'll be an interesting watch, 6.5 to 7, to see whether the consumer is improving over there. That is, of course, Chinese consumers buying. So what actually happened over the week? Well, we went down and we saw a pretty big sell into the 6,200 level. Then we saw a massive put wall appear that also then appeared at 6,300, and the market just started to ramp back up off it. Basically, as soon as this market drops, everyone just buys puts. And that seems to be kind of the storyline of the wall of worry. Now, why is this important to note? Well, of course, when you're looking at engulfs, and there's no doubt in my mind it was an engulfing candle, however, didn't confirm by making a new low, of course. This is an interesting topping possibility still, because you might say, oh, but Tom, it's instantly reversing and stuff. That's true. There's going to be a lot of stop losses above here, which basically means there's a lot of liquidity above here. So will the market rip it and then sell it off like a 6,400 plus quickly and then sell it off? If that happens, it does actually open up more of a chance that the markets actually want to go for that mean reversion. And do remember, the big key level is going to be ultimately 6,000, which is the weekly 20 moving average, an anchored VWAP, demand zone, all sorts of things. So how do you know that's going to more likely happen? Well, you're going to have to get the market underneath 6,200. And do remember, the daily, the weekly, and the monthly all are continuing to be in bull trends. And it's the same thing we said, unfortunately for bears out there, it is a high, it is a low, it is a higher high, and it was an equal low. So it wasn't a lower low, it was an equal low. So that's not going to confirm it from the price action standpoint at this stage. So for bears trying to pull the trigger and get into shorts, just remember, shorting is way harder than bulling, and bulling is way easier than being negative, especially when it comes to the index. However, that being said, I still think, and I think a lot of us think, volatility is here now, because that big one that happened only a week ago in terms of the sell, always when I go on vacation, by the way, guys, sells happen, it seems. So if you want me to get the market to sell off, I'll go on a quick vacation for a week and it will sell. It always happens that way, I'm telling you. US 500 obviously has seen that vol. So the vol is here, and we expect kangaroo style action. So volatile trading, all sorts of things going through. US 500, here are the options high and low levels. We did get to the 61.8, 75 fib. We saw a sell, we recovered, we saw a sell again, made a higher low, so again, no lower lows. Level to watch this week, probably be 63. If we get under that, there could be a little bit of bearish action. That would also potentially confirm a lower high. So again, if we then go under 62, it would be stronger in terms of the short. But for the bulls, it's basically clear 64, close above it, then go bullish because positive gamma. And of course, everybody else seems to be incredibly bullish on this market right now. And I guess rightfully so when you start considering all of these calls everywhere. Look at these calls, guys. Puts were everywhere last week. Calls are everywhere this week. 6,400. It is just the number coming into inflation. Look at this. The Monday, the Tuesday, big numbers. The end of the week, just everywhere. 6,400, 6,500. Every 50-point split seems to matter. So, of course, I expect the 6,400 level to be ferociously fought over, at least for the Monday and potentially Tuesday campaign. And Tesla, you can see here, also starting to find a little bit of its groove, moving up to the 330 core wall, getting strong again, and will it nail the downward trend line? We'll look at that very, very soon on the markets. But at the moment, it's in a bit of positive gamma. And of course, NVIDIA and semiconductors still leading this market. And when you have semis leading, you can't really be super bearish. Here is the chart. Now, have we seen consolidation? Yes. Have we seen a pullback in time in terms of the combo? Yes. Have we seen it sell? As we said to you guys last week, and we talked about it all together, the answer is no. We still haven't seen that. So we do have the potential here of still a double top. We do have a potential here of a breakdown on semis, but for now, semis remain intact and bullish. And even though staples did go through, which is again something you should be looking at, and we also saw one of our favorite reads of bond risk come up, which again tells me volatility is most likely here. We didn't end up getting everything. So you didn't get things like healthcare bouncing up, and you didn't, more importantly, get below 6,200. That was the thing that we really needed to see. That's the price action confirmation, which is so important. I also brought up the American consumer, which of course we track, and that is actually starting to weaken. So could it be that tariffs are starting to hit, price is actually going up, and people are starting to feel it? Hey, you guys on the ground are the best commenters for us. Obviously, this is US based mostly that I want to hear from. Do you guys see prices coming down, or are they going up for you? And what are they going up in if you are seeing it? Put it in the comments down below. Always interested to check that out, and I do appreciate your comments, guys. Dollar index. Now, the US dollar, we saw a lot of rally off this. Of course, this is the inverse head and shoulders. It kind of hit the first target. Didn't hit 101.6. It is overall in a downward trend. I think we already know that everyone wants to see, well, at least Trump wants to see a bunch of cuts, and particularly that's now becoming more of a reality as we see problems. But could inflation number switch it around? It's still in downward trend. However, we do have a little bit of support coming up for it. And I think most people looking for the bull side will be looking for a 99 plus this week. And if you look at the weekly, you can see here, it's still a little bit more bullish in terms of structure in the short time frames. Long time frames, I'm still bearish. Let's move over to gold. Gold did well, then it got tariffed, and you can see that, of course, and then it got untariffed, or at least clarified. So this is an important zone for gold. You guys know I'm bullish it. Obviously, anyone can see this type of thing or this type of pattern. We've talked a lot about the potential here of 4,000, 4,200. I'm still pretty bullish on gold. I think central banks are buying it, which we know. I think that people are buying it in general because they don't believe in currencies as much. And I think that that's kind of being justified by the way that every nation seems to be acting around their own currencies. And, you know, a lot of countries are literally just employing people as a government. Is your country doing it? I'm pretty sure it's probably true. Most Western nations anyway, it seems like all the jobs are coming from the government. So the government's just like, oh, we'll just open up a new division and hire people, and now the jobs look good. It's pretty much happening underneath the hood, so certainly something to watch. And if that starts to go away, wow, we could be in trouble with these jobs numbers. Let's move over to silver, and you can see here that silver is bouncing up as well. Bit of a nasty couple of weeks here, but you guys know I'm quite bullish on silver, and it hit resistance after breaking through that first level. So if you went bullish on silver after a break of 37.25 area, well done to you. Pretty nice, good stuff. And obviously we'd like to see this break a new high and get into those 40s. I think it could be just a matter of time. Oil looks pretty terrible. It looks pretty sally. So obviously big rejection, sold off, closed below 65. Looks like it wants to go towards 61. Is an inflation week, so we'll find out on that one, but something to watch. And then, of course, there was Tesla, which is the old Classico kind of trend line. And it hit it, and now the question is, are we going to see a sell at 330 and that core wall, or are we going to see a bust of it and probably a fairly fast move? And this is going to be an important chart because, of course, what we've also observed is that Apple, Google, and Tesla, which are the laggards, Apple giving a giant logo kind of looking sculpture, I think, to Trump this week, and then going up a bunch. Google overall, of course, one of my favorites in terms of fundamentals, but not doing so well until more recently. And then, of course, Tesla, but all the laggards, so not doing so well across the board. And you can see here that we've got this big break. So that's kind of suggesting that, again, is it going to be kind of bearish or hard to go bearish when you've got these types of rallies kind of going through? Certainly could be. Let's now have a look at NVIDIA. Still strong, as you can see here, guys. Very, very strong. It's a series of high highs and high lows, no break below the daily 20. So at this stage, still in an upward trend. And if semis are up, generally the market is up. And then, of course, we've got the US 2K. So this is interesting because it closed below this level, came up, dojied a bunch, and it is now the most shorted index or shorted time it's ever been shorted since 2022. Now, that was near the lows. So is it finally time to see the US 2K go up? Well, it's going to need rate cuts. It's also going to need quite a lot of help in terms of getting a squeeze on. So has that happened yet? The answer is quite simply, again, no. And it is quite crappy looking on the chart in comparison. Now, things could change and we could bounce and break above this level, but certainly does show that there is like a weird internal weakness in the market. It's not the same as it should be if you were really in a great market. You're in a innovation-driven, 35% of stocks absolutely smashing it, and the rest kind of doing not that much. Let's take a look at the NASDAQ. NASDAQ is ramping again, and again, it came up to something like a 61.8 fib, retraced a bit, then came up, then retraced a bit, and then just kept rallying anyway. It doesn't care about tariffs, doesn't care about anything at this stage. Yeah, it's very interesting what happens here. So again, trend is still intact. You can see the main thing for the NASDAQ was to hold this level as to not make a lower low. You could have argued again here was not a bad short, which could get trapped here. So again, that could be a liquidity grab and all types of stop loss hunts, etc. that are going on up here. But for now, the trend is still intact to the bullish side. So volatility, probably, certainly markets are heating up in terms of vol. And when you get these types of candles, I expect lots of wild action. So I think it's going to be pretty exciting over the next couple of months. Now, where it has been really exciting, congratulations to ETH holders. Now, this one, yeah, it's been pretty bullish on the charts. It started to go a bit bearish, actually changed trend on the daily towards the short. And you can see that's where the short was. And it's just squeezing higher. Now, the weekly, monthly is still very bullish. And we've talked about this a fair bit. It's one of those ones that's catching a lot of fire thanks to a lot of fund managers wanting it now and making a big deal out of it. And of course, you've got a significant breakout here on the weekly should it be able to hold it. So yeah, 4,600 could be the next stop for Ethereum. It doesn't look weak at all. And it looks like a lot of money flow is still going in. And of course, then there was Bitcoin, which is taking a breather while the other coins go. And it still looks pretty good to me. So, the same levels are maintained. You've got that weekly 20 moving average that could intersect with about 108, 105 kind of area. This level would be pretty cool if it did dip down to that zone. But for now, I mean, there's no real reason to be super terrified on the long term. And I wouldn't really say that was an excellent buy. Yes, you could argue it's resistance support, but I wouldn't say it was like stellar or anything. That being said, break of this upward trend of 120 would be a huge deal for this, and that could really push it through. Now let's take a look at this week in news. So we've got some big news echo events, and the big one here is of course the RBA statement that's most likely going to be cut. I think it's like almost 100% chance, like 99 or 98% chance. So pretty much Australia's going to get an interest rate cut, and then we get core inflation numbers coming out for the US. Now this will be a pretty important one because people are looking for those tariffs to take an impact. So far, nothing much. Could be a while away, I'd say, but there was that interesting chart I shared before in the video. And then, of course, we have some unemployment numbers for Australia, PPI for the US on Friday, and then we go through to core retail sales. Now, you'll see these dates and times will be a little bit off. That is because I am still on vacation technically, but when we get back, guys, everything will go back to normal. So I appreciate that, and hopefully you can bear with me. So guys, if you enjoyed today's video, make sure to subscribe, smash that like button. I guess to summarize, as we often like to do at the end of this show, at the moment, the price action has still remained bullish. Semiconductors still lead, and that is key because if they're doing it, it's all good. And we're still looking for the rise of the defensives, and we have not seen that yet from the street. Big news will be what's happening with inflation this week, and do remember, the interesting stat here is the semiconductor stat, which is that 18 times that we've seen similar reads in semis. Even if we dip a lot, it could still be bought up pretty big time because that strength tends to beget more strength. Thanks so much, guys. You have a fantastic weekend with your friends and family, and we'll see you in the next one.